The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Welcome to the offices of Duke & Duke, 100 South Broad Street, Philadelphia, Pennsylvania. And today we're going to start out with a chart from our good friend Mr. Z in the den. He was kind enough to send us this pattern that we're having in December corn, also known as Christmas corn. As you can see, we had a very negative crop report, and the market tanked quite badly. But there's something interesting that's also happening here, and that is the fact that we have new crop corn is in very, very bad disarray, whereas we have the old crop corn is which is May and July and September is doing actually quite well. And I will put this chart in here so you can see the difference between the two contracts. It's really quite amazing. And not only that, but the December has actually bounced up a little bit after that bad report. We're trading a tiny bit higher in this. So you can see the blue line, which is the new crop corn, has made new lows by quite a bit, and it's making several bottoms in here. It had a 3 drive to a bottom, had a pretty good rally, and then with the report, it broke down even worse. It looks like they're going to be planting corn in between the yellow lines on the freeways all across Illinois, Indiana, and Iowa this year. That doesn't mean it's going to be harvested, but that just means that they'll be planting it there. So there'll be a lot of things happening in corn. It reminds me of about 15 years ago. One of the big hedge fund managers was interested in the soybean market, and beans were on their kabuki. They were really low, and he made a comment that said that the only use that they could see for soybean meal in the foreseeable future was to use it as sawdust on the floors of a honky-tonk country and western bar. And that was within 1 day of the actual bottom before it rallied well over $30,000 a contract. So just because someone says something, that doesn't mean it's true. That leads to my next segment here, and that is we're going to start a new segment here on my show. It's going to be called The Experts Speak. It's from a book that I have by Cerf and Navasky. It's 400 pages of small type of some of the most amazing things that people have said that were totally wrong. I'll give you an example. Decca Record Company executive turning down the Beatles in 1962. We don't like their sound. Groups of guitars are on their way out. Stocks have reached what looks like a permanent high plateau. Irving Fisher, professor of economics at Yale University, October 17th, 1929. And this is one of my favorites too, and this is no reason for any individual to have a computer in their home. The president of Digital Equipment Corporation as early as 1977. And one of my all-time favorites comes from the sports thing, and that's from this is from the 1980 hockey team. It's from "Playing the Russians will be a lesson in futility. You know what our chances are, slim and none." And that was from Herb Brooks, coach of the U.S. Olympic hockey team in 1980, that went on to win the Olympics and became very, very famous. So we're going to do this each day, just talk about just a couple of things that people have said. And believe me, with 400 pages, you wouldn't believe some of the things that have been said about some stuff that is so wrong. And you got to remember that, because when you're trading, the only thing that you can do is protect your backside. Everybody can have an opinion. There's nothing wrong with that. There's nothing wrong with being wrong. The problem is in staying wrong. And that's what you have to learn to do, is when you're wrong, you just got to, give it up. Now, we're going to have Shane Smolian on from the wolftrader.net at 9:30. He's going to talk to us about how the Fed juices the market. I've never seen anything like this. Of course, we haven't had quantitative easing, but this is an incredible index that he's developed, and he's going to talk to us about it today and give us some caveats about it also, but it looks very interesting. As regards to the market, we were down 100 points, and then when the market hit the exact 61% retracements on the S&P and then the Dow Jones, it hit the 50% on the NASDAQ early in the morning on Friday, and from there we went down from down 100 to up 130. Looks like we're going to be higher again today. There's no question that the Bradley model is certainly off kilter, and we just have to just see what's going to happen next. The patterns for the New York Stock Exchange Index are still valid. A little bit higher today doesn't invalidate that at all, because we still have significantly lower tops, but we're making some really strong moves in the advanced decline line above highs that we've seen when the market was high in May of May 19th. Even though the market's lower, that means they're buying lower price stocks to push things up. Stop and think, folks. IBM's gone from, I think, 112 to 152, and it's setting right at the 61% retracement of the last major move down. So if you want to have something to take a look at, watch the watch IBM on the short side up around this 155 level. That would be it. Might take a look at what John Logan says in his TAS profile, because that's been pretty good at looking at it. But it hasn't had a $3 correction in 8 weeks, and that's unusual for a stock that has been in a prolonged bear market for so very, very long. The two markets that I think you've got to really watch this week are the crude oil markets, because we have a chance in crude oil to make a possible substantial bottom. And I say possible because that's what it is. It's just a possibility. But we've had the 3 drive to a bottom pattern over the past year. When we bottomed in February, which was a 1 tick lower bottom than the one we had in January, that completed basically a 3-month cycle, and you'll see that we are approaching the 38% retracement here in the crude oil. Now, what's interesting about this is the fact that it's actually taking about 2.5 weeks to make this 38% retracement, which is telling you that there's not a lot of selling that came in right away. Now, it could still break that, and if we get below $35 a barrel, that will tell us that we're most probably going to go down to test the either the 618 at $32 a barrel or the 786 at $29 a barrel. And if we get below that, then all bets are off, and it could really turn. But we still have a lot of people that are still bearish crude oil, but the pattern is such that there's a possibility here that this 3 drive pattern on the longer term time frame could be something that looks very interesting. The other one that you have to pay attention to is the gold market. Now, last night gold got down to 1216, which was a 61% retracement of the range from Friday. We went from I think 1206 up to 1211 up to 1224. We backed off to 1216, and now we've completed that small ABCD pattern, but we still got a chance at 1190 in the gold. I know I'm still holding out hope for it, because if we get there, we've got something that will be very, very interesting on a longer term basis, and I'll discuss that more when we get back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and my good friend Jim Twentyman and I and Jim Bartolioni have put a thing together on gold, a bunch of charts that look really interesting. And if you'd like to receive that special report, you'll have to ask TFNN. So ask TFNN for the special report that we wrote on the gold market, and it'll look pretty interesting. I didn't want to put all the charts in here because there are too many and they get a little confusing. The next one I wanted to cover before we have Shane on, we've got a couple other to cover, but as you can see, the Bradley model is off by more than a week, which is unusual, but that can still happen. But remember, folks, what's happening in the stock market is only 100 stocks. We're looking at stocks, the 30 Dow stocks that are going, that are pretty strong. Then you're looking at the 25 to 30 stocks in the NASDAQ 100, and the rest of them are the S&P 500 stocks. So 100 stocks of the high-capped nature, high price nature, are causing all of this. You know, of the big move in the Dow is, a lot of it is IBM going from 112 to 155. I mean, that's a huge move, and that's a big part of what's going on in the market. So we'll keep an eye on this, because we've had this happen before, and it's really, if you look at the New York Stock Exchange Index, it's not doing anywhere near what the rest of the market is doing at all. It's really quite a bit different, and it looks, still like a bear market. I mean, it's got lower tops, and it's quite symmetrical, and it's basically showing, that the market is still bearish, but that's not what we're seeing as reported. And then, of course, we have the Federal Reserve in there, pumping the juice into everything. And so that's another reason that these are interesting times, as they say in the Chinese curse. So we'll keep a close eye on that. But the key ones, I think, this week, well, there's several. We have the euro at the 114.70 level, and we have the crude oil at the 35.90 level, And then of course we have the gold. If we get down to 1190 in the gold, that'll be a real interesting one. But below 1170, it won't be interesting at all. It'll be it just will not work out. But that's what it looks like from the gold market. The gold market, I have to share one chart with you here because this is really an interesting one, and I think it's worth looking at. This is gold. Going back to this is from our good friend Jim Bartolioni, but this is and boy, he does a lot of good work long term. The low in gold was at 1913, which when we had the Federal Reserve was $20.67 an ounce. And as you can see, we rallied up to 871 in January of 1980. January the 20th of 1980 was the high. And then we corrected 71% of that move into 2002 when we reached 256 per ounce. And then we rallied up into 2011 when we hit 1932 an ounce. And then we've had a nice correction. It's been 3.5 years. But notice how the correction has been very, very orderly. It hasn't been a collapse of any kind, not like what happened in 1980, of course. And we're sitting right at that 20-minute line. You'll notice that red line that's there is a 20-minute line because it connects the old highs and brings you into the new low that we had down there when we were at 1030 and per ounce. So this is why this is just part of it. If you go through the special report in gold, you'll see this line pop up at really critical times in gold historically, and this is going back to 1913, and we carried it forward through 1989 and the whole year. You'll be able to see, not every year, but you'll see the line, how it lines up, and we've got that potential coming in here. So we'll watch it with a great deal of anticipation if we get down into that area for sure. That's one of the main things that we want to be looking at. One other thing that I wanted to mention, I was thinking of Basil Chapman over the weekend because I saw a special report from California that there is a nail pedicure and manicure place for ladies in Orange County. That is a specialty. It's called Diamonds and Nails, and they have diamonds in the nails for ladies. They go all the way up. I think this starts at $1,000 to have your nails done, all the way up to $25,000 to have your nails done. I thought that was a really nice treat. If one of you folks want to get that, if you'll call me, I'll give you the number. They're booked pretty much in advance, but we'll try to squeeze you in if we can. The other thing is that they have one of the toys that they bought for the Idle Rich is a $500,000 slot car racing system. Boy, I tell you folks, I don't know if this is like 1928 or 1929, but there's an awful lot of opulence out there. When you look at some of the real estate that's being sold, it's really quite amazing. And then the new Bugatti is coming out at $2 million, and they've already sold it out. I think they only make 100 of them, so it's not a big thing. So we'll watch this. And sold out. You're absolutely right, Basil. They are sold out. Basil, I want to compliment you on that work that you did with the similarities between 28 and 29 and what we're going through now with the skyscraper index and some of the other things. In fact, when I saw the Boston skyline on the news this week, I actually couldn't believe it. When I was in Boston in 1970, the biggest building there was the Prudential Insurance Building, and I think it was like 30 stories high. I'm probably not even there anymore, but that was the biggest building in Boston at the time. And my goodness, it was really really unbelievable. So who knows? I know the John Hancock in Chicago is a big one because I lived across the street from the John Hancock when I was trading on the floor of the exchange. I lived at McClurg Court, and I could see the top of the Hancock building quite a bit. But the Sears building is it's hard to believe the Sears building is going to be 60 years old pretty soon. And my God, I was in college when that darn thing was built, I believe. Yes, I was. Yeah, I sure was. No, no, no. I was still in high school. Still in high school. But that's an incredible building. Well, let's get back to the markets. You don't want to hear this baloney. Okay, let's take a look now at what we're going to be seeing today. We're going to see a little bit higher high. We could go a lot higher. But remember, the last 3 days of the month and the first 2 trading days of the month have a positive bias. So we should be finished with that today. Whether that's going to mean anything. The problem is I don't have anything else out there astrological that gives us anything of any indication at all. We're going to have Norm Winsky on Wednesday, so that'll be an interesting show because he's been pretty accurate is the understatement of the year. He's been spot on. We're very lucky here at TFNN to have all the folks that we have on the show, plus the other people that come in. You know, it's just it's really amazing what Tom O'Brien has done to put all these folks together to, try to help us get good information of what's going on in the markets, and that's the main thing. I'm watching gold on a tick-by-tick basis because I really think we've got a chance here, and the key is going to be if we get above 1250 without a correction, then we've got to make another decision. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We're going to have Shane on the line just as soon as we can make contact with him. I posted one of the charts in that he's going to be talking about. I'll let him describe it to you, but you can see it has the same technical indicators, that we look at. Price movement going up and down, making these A, B, C, D patterns, which is interesting. But the way that he calculates this index is what's really interesting, folks. I keep close contact with him each day. We share what he's looking at, and I share what I'm looking at. But he's really an unusual young man because he's so well. He's got a lot of degrees and stuff. He's very smart, and he's very humble, which is a good thing. But the main thing is he's developed some things that are really quite effective and quite interesting. So we feel lucky to have him, joining our show when he can. But this index, I've never seen anything like this. I mean, I keep hearing about quantitative easing. No one's ever been able to explain it to me in a way that tells me that what the hell is really going on. But frankly, it's an amazing concept that certainly has to be what's going on, because we're seeing things in the market that I haven't seen before. When the market breaks these numbers after holding them for such a long period of time, you have to wonder what is happening out there. That's one of the reasons why I picked up that book, The Experts Speak, because you're wrong a lot, and you've got to be able to say, okay, this is where you have to fish or cut bait, and that's the main thing of what you really want to try to do. So we'll keep a close eye on these markets as we go through today here, watching them. So far, the markets were down about 15 points in the Dow, down a little bit in the S&P, not very much at all. So there's really very little happening there. So we'll see if anything is going to happen, but we'll watch to see if anything is going to be moving today. It's still very early in the morning for this to be happening, so we'll see what the rest of it goes through. As you can hear, I'm stalling to see if we can get our friend Shane on the line. I'm having a little technical difficulty, so bear with me on that, and then we'll see if we can get it. I wanted to share with you the chart of the IWM. As you can see, it's been in a really protected bear market since May, like everything else. And so one of the things that you want to do is to realize that we're making a little three-drive pattern here in the IWM over the last month. I've drawn in the ABCD pattern that you could see there, and it's very similar to the pattern that we had back in December. This has been a much stronger rally, but here again, this had been one of the leading things on the market on the way up, and it's not leading on the way up this time. Just like the Nasdaq, we've made a 78% retracement in the Nasdaq as of Friday's close too. So all of those, have lined up pretty nicely. But I don't think this is a new breakout into new high ground, folks. If you look at the chart of IBM, just if you get a chance, take a look at it. I didn't do the chart of IBM, but I frankly wanted to see the one on Facebook, because that's another one that is, one of the things that ran the market up quite a bit. And the reason why I'm showing you the Facebook chart is, even though this looks like it could be bullish, if you look at the ABCD structure that's here, you'll see that the ABCD pattern from February to where we are now just basically makes a double top up here at this 117 level. And that's what it appears to be doing, is making a double top in Facebook. Now, if we get above the 120 level, then this would certainly, go on up and make a three drive to a top pattern, and then, it could be on its way. Maybe this stuff goes up forever, and that's also a possibility. But frankly, right now, I think we just wait and see, what's happening with it, and we'll go from there. We're seeing the same thing with Amazon. Also is doing okay, but still far worse than the other markets. It's basically been the cats and dogs that have pushed this this thing up, like IBM and some of the Caterpillar and some of the others that have been hurt so badly that there is the one that have pushed the market into these areas where it has been, pretty intense. It doesn't appear like we're going to be able to get Shane on the line today, so I'm just going to continue on here, and we'll get him on at another time. He must be busy, otherwise I know he would be on. I want to switch over to one of the other one of my favorite markets to look at, and that is really, if you believe in patterns and you like ratios and you like foreign exchange, you have to take a look at the Swiss franc here, folks. If you look at the Swiss over the last year, you'll see some of the amazing patterns that you have going on right here. And I didn't draw it in, but on the Swiss franc, we also have a 20-man line that comes in around this 95 level in the Swiss. So pay particular attention to this one here, because if we get a move out of here, it could be really, really substantial. The last time we had a move like this, back on February the 8th, it rallied 5 handles, which in the foreign exchange market, that's equivalent to over 100 S&P points. So these things can move very dramatically. And the good part is you don't have to risk an arm and a leg if you're watching these things, because it makes it a lot easier to put a stop in. You only have to risk usually about 50 pips, which is $500. So watch this Swiss franc. That's another one that looks extremely interesting. And then, of course, when you're doing anything in the stock market, you want to be able to look at this the Japanese yen, because we're doing the same thing in the Japanese yen. We're coming down into support that has been around for well over 2 months now, since February. Here we are into April, and that's something that you've got to pay attention to. We're trading now at 111.50, so we could be making a little retracement bottom in here. This is a daily chart. And we saw this head and shoulders pattern, way back in November. That worked out pretty nicely. You can see the 20-man lines that were there, the green lines that you see on this chart. These are lines that Jim Twentyman started using many, many years ago. This is back when we were doing charts by hand, that we would get them in from Commodity Perspective on Saturday morning by special delivery, and start to do our charts for the rest of the week, and we kept them at. I kept those charts for well over 20 years, and then finally they just got too bulky, and I had them pick them up, and they took them to the old paper cemetery, and that was it. Then they were probably used with some really good use after that time period, but I'm not sure exactly what that would have been. We'll have to decide what's going on. As far as we've had a question about the emerging markets, they really haven't done very much at all. If you look at the Chinese market, and you look at the emerging market index, EEM, that has also not done too much also over a period of time during this rally. So there's not been anything really big happening, other than the fact that with these Dow stocks, the few S&P stocks and the few NASDAQ stocks are the ones that have been making this thing run. And boy, run it does, because once it starts going, it really moves. 877-927-6648.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solutions CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, folks, we're going to take a look at the transportations and the utilities here. As you can see on this Dow Jones transportation chart, we've had 4 major Gartley patterns on the sell side in this market since 2014. This has been the strongest rally that we've had. It stopped exactly last week at the 61% retracement of the whole move down. We finally have our friend Shane on the line. Are you there, my friend? I guess maybe not. I keep trying.
Can you hear me?
Hey, there you go. Sorry, buddy. We had a few technical difficulties, but I think we've got it. I think we've got it up and running right now, so we should be okay.
Okay, great.
I posted the first chart in here, which is the chart on the. It's called the. I guess it's the Fed Juice chart. RSI. Is that the one we could start with?
Can we start with the big one, for the one that says QE ends and rally stalls? That one.
I think so. Just a second. Let's double check and see if I can get that one. Overlay. I hope this is it. There we go. Give the Italian a second chance and you'll never regret it. Hold on just a second, partner. There
Sure.
it is. There's your qualitative ends and rally stalls. Go right ahead.
Okay, so I want to give an overview, big picture in terms of what's happening. And what I'm going to be talking about today primarily is the effect of the Federal Reserve on the markets, because this is a critical factor. In fact, it's a dominating factor to consider before we even look at astrology or cycles. We need to understand what is the Fed doing. And if you take a look at the left side of this chart, you can see this is QE3 on the left side with that dashed line in the middle. And this was during the taper period. So on the bottom, you can see the Fed juice down there as it was declining as the taper continued. And then after the dashed line, that's when the QE ended and the rally completely stalled. So the QE has been a driving factor of the market since 2009. And after that rally stalled, we fell into this period on the right side where this Fed juice has just been completely dominating what the market is doing. And it fell into this narrow range, and it's picked all the highs and the tops in 2015. And the last run up here has been the highest run since 2013. So I just wanted to put that in perspective for the viewers to show how much money the Fed has put in since this market bottom, and the February market bottom. So it is unusual for this market to be rallying like it is, but if we take a look at these charts, we can see the evidence here in terms of what is actually happening.
Okay, now which one would you like to go to next?
Can we go to the one that says the triple top and the Fed juice?
Okay, just give me a second and I'll pull that up. I had these ready to go, and then my email service got a little bit whacked, and so I think I should be okay here. And I believe that's this one over. Yeah, I think this is it. This is the Fed juice dominating the market?
Yeah.
Okay, just give me that one. This is one of my favorites, because this really, I'm a chart person, and boy, this really spells out that, boy, when they come in there to do something, they do it in a big way.
Yeah, and what happens is this is 2015. You can see I've labeled all of these major turns. At the bottom, this is the Fed juice. At the top, it's the SPY. And so all the way from A through the letter S, if you take a look on the left side, letter A, you can see that market top. B is a bottom, C is another top, and so on. So as you go across this chart, you can see that pretty much every single major turning point, I think there's one exception in there that didn't happen, but every single major turning point corresponds directly with what the Fed is doing. And what a lot of people don't realize is that the effect of quantitative easing is, you were talking about it before, they collect all these assets, but the real important part of it is that they take those assets and then they send them back into the market. So that's really the importance of the quantitative easing. Now, they're limited with what they can do when we're not in a quantitative easing, but for some reason, if you look over on the right-hand side, on this recent rally, they've shot so much money into the market that it's mind-boggling, and they're doing something they've never done before. We're not in quantitative easing, and they're behaving as if we are. They're putting as much money in the market as they have since 2013. And they've been pushing this up, and it's made this triple top, and each of these tops has been record highs in the Fed juice.
Shane, do you have any idea why they would be doing this?
I don't know. I can only speculate as to why they're doing it. I just think that the S&P is such an important index in terms of economic confidence that they don't want the market to go off the cliff here. And I think if this juice, or when it does turn back down, the market is going to head down in a swift fashion.
Mm-hmm. We have a question from one of our listeners here at TFNN. Have you done this quantitative easing and looked at it with the bond or note market?
No, I primarily look at the SPY because I think this is where they're placing their money. I don't know the exact mechanism of how this is done. But I do know that this money is coming off their balance sheet, and somehow they're putting this back into the market, and the market tracks it exactly as you can see here. So the market's very sensitive to the Fed, but we can't even really look at astrology or cycles until we take this layer off the table. And right now, this is the dominating factor.
Okay, makes good sense to me. Now we're gonna be coming up to a break pretty soon.
Sure.
But we've got one more chart here on the speeds of the planet, which is one of my favorite subjects, and I'll
Sure.
put this one in here. You can talk to us about that.
Sure.
Okay, it's up
so
there.
So I like to, you have a lot of financial astrologers on. Norm Winsky does an excellent job. I mean, if your listeners haven't heard him yet, I mean, the guy is phenomenal. And I really liked his Super Bowl prediction. He predicted the Broncos, and damn it, that didn't come true. So he's very good in terms of the actual transits. I've listened to him. He's excellent. What I look at is more of like the net sum of what all the planets are doing together. And so right now, this is the planetary speed index, and the markets tend to follow the speed of all of the planets, okay? And right now we're coming up into one of the biggest drops because this month we have 3 major planets going retrograde. We have Mars, we have Pluto, and then we have Mercury at the end of the month. When the planets go retrograde, they slow down in motion, and the market does not like that. In fact, every major crash has happened within 3 days of a Mercury retrograde. So this month and next month is a very dangerous time for the markets from an astrological standpoint. Now, I don't know what the Fed's going to keep doing, and if they keep figuring out a way to put this money in the market, none of this is going to make any difference. But I do suspect that they're a little bit overextended, and they're going to have to pull back. And when that happens, the market is set up for an extreme decline this month and next month. And this is the chart that bears that out.
Well, I remember when you were talking to us a month or so ago when we were having this bottom formed in February. That turned out to be spot on. I think it was within 1 day of the exact bottom that you were looking at. So, in fact, you can see it there on the chart there. It was in that middle of February range where the market started to go higher, and it certainly did do that.
Exactly. And, you know, when we take the Fed into account, which I'll show you on the next chart when we come back from the break, you can see clearly
hold on.
happened.
Stay with us, and we'll be right back with you right
Sure.
after this, okay? All right, my friend.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have Shane Smolian from wolftrader.net, and we're talking about the Fed juice, and I've posted your S&P RSI chart in. Would you like to go over that one?
Sure. Okay, so what this chart is I've taken the Fed juice. You can see this on the bottom. That's the blue chart. And this is, and again, I want to clarify this for the listeners. This is not an overlay of the market. This is not a MACD. This is not a stochastic. This is what the Fed is doing. It's the data that I receive from the Federal Reserve every day, and we take a look at their balance sheet, what they're lending, what they're buying, what they're selling, and we take a look at this, and we create this indicator. Now, this indicator is pretty good. You can see I've labeled this A, B, C, and D here, and you can see it looks like the market follows it exactly. But what I've done is I've created a second indicator called a Fed Juice RSI, and this indicator is a spread between the Fed juice and the SPY. And so the reason I did that is because sometimes the market will lead the Fed juice. It'll start the move before, and sometimes it will lag the Fed juice. And this is the indicator that we really need to watch because it can predict market tops and bottoms very well. So let's take a look at part A there on the chart. On the top, you can see that the market turns here pretty much in sync with the Fed juice. So you see how that letter A, the red one and the blue one, that they're moving together. And down here on B, if you take over to the right on B, you can see that they turn together again. So they're in sync right there. But sometimes the market will turn a little early. So if you look at C on that market bottom in February, you see how the market moved before the Fed juice? You see that?
Yes.
Okay. So this indicator will reflect that. So the indicator jumps up early. You see how the indicator crosses up there? And it shows the move in advance. So if the market is a little stronger, then this indicator will show you. If the market's a little weaker, it will also show you. So at the top over on D, on the top right, you can see that the indicator topped on the 17th. That was our original top date. And it's been kind of lagging and falling down ever since. Now, the Fed
Shane, we've ran out of time, my friend, and I can't thank you enough for coming on, and I want to have you on again, but we really, really appreciate it. You're
Thanks, Larry.
you're one of our diamonds, buddy. Thanks a lot. Keep up the great work.
Take care. All right, bye-bye.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.